When we think about major financial risks, our minds usually jump to the stock market, or maybe those giant, well-known banks. But what if I told you the real threat coming in 2026, especially if you have a mortgage, is hiding in plain sight, with a lender you probably thought you could trust?
And look, this isn't just some wild speculation. This is a direct warning coming from people deep inside the real estate world. It's a statement that should make all of us stop and look away from the familiar banks we see every day and instead turn our attention to a hidden danger brewing in our financial system.
And here's the thing. This isn't some distant, theoretical problem for the future. The panic? It's already starting. The people who run these private lending institutions are getting very, very nervous, and that can have some serious consequences for anyone with a mortgage.
So before we can even begin to figure out if your mortgage is at risk, we've got to get on the same page. We need to understand who or what exactly these shadow banks really are.
Okay, so in simple terms, these are not your typical big-name banks. We're talking about private lenders and things called mortgage investment corporations. The reason they're called shadow banks is because they operate outside the heavy regulations of the traditional banking system. Basically, they play by a completely different set of rules. And this right here, this is where the real danger is. See, traditional banks get their money from customer deposits, your checking and savings accounts. That's a really stable source of cash. But shadow banks, they get their money from private investors who are looking for high, quick returns. So their main motivation isn't long-term stability. It's all about making those investors happy. And that critical difference is what makes them so vulnerable.
And that fundamental difference in how they get their money is the exact reason these private lenders are starting to freak out. It sets off this incredibly dangerous chain reaction that puts regular borrowers, people like you and me, directly in the line of fire. Let's break down how that happens.
So picture it like a row of dominoes. The first domino falls when those private investors get nervous and they demand their cash back from the lender. But wait, the lender doesn't have a giant vault of cash. That money is tied up in mortgages. This kicks off a massive cash crisis for them. So to get that cash, and get it quickly, they have one main move. They stop renewing mortgages and demand that borrowers pay them back now. All of a sudden, your loan isn't being renewed. It's being called in.
So naturally, this brings us to the single most important question. Could this crisis actually hit you? Let's take a look and see if you might be in what we're calling the danger zone. This is the question you absolutely need to be asking yourself right now. And thankfully, there are some really clear warning signs that can help you figure this out. Okay, here's a super simple checklist. First question, is your lender one of the big 6 banks or is it a private lender? Second question, is your mortgage term set to end somewhere in or around 2026? Now, if you answered yes to both of those questions, you need to pay close attention. You could be in the danger zone. Your lender's first priority might not be renewing your loan, it might be getting their cash back to pay off their own investors.
At the end of the day, this isn't just about some abstract financial trend. This is about your home, your family, and your financial security. The next few years could get rocky, and knowing exactly who holds your mortgage, and more importantly, where they get their money, has never been more crucial. So is your lender built for stability or for speed? The answer to that question could make all the difference.